Okay, so this afternoon, sort of kick off continuing the topic around battery materials and give you some explainer about InnoEnergy and also what's happening in Europe, and then some snippets about other value chain activities and trends that we see happening currently, particularly with our experience of the network within Europe and what's been happening. Okay, so first thing about InnoEnergy, and I wish I could give this presentation to everybody I meet because it takes a bit of explaining, but it's a public-private enterprise. So we've been largely funded by the EU, but also we have shareholders from the European industrial, banking, university, other sectors as well. And what we're trying to achieve is effectively to implement the EU's goals around energy transition. So particularly with regards to a 2050 net zero target, we are trying to build out industry to support that. So here are our goals on the right-hand side. You can see it's all about energy security, reducing costs, reducing emissions, improving competitiveness and barriers to entry, removing barriers to entry, and creating jobs as well. Now, InnoEnergy also runs the European Battery Alliance, and the 250 attached to the Battery Alliance is the target from the EU to create an ecosystem in Europe worth 250 billion euros by 2025. And we're already surpassed that, given the investment that has already happened to date, particularly on the downstream. What does the EBA do? We're a independent meeting place, so it's not necessarily a membership-paid organisation. It's designed to support all of the different players within this ecosystem, and really try and advance different stages of the value chain based on collaboration, but also networking and development. What are we doing with this new EBM fund? This is a sort of working title for this new fund. And we know, and we'll see on the next slide, that currently in Europe, the weak spot is raw materials. The domestic supply of battery raw materials for this industry is currently relatively weak compared to the growth we see on the downstream. And we need to do something about that. So our focus is to launch a new fund to target specifically the battery raw material commodities, both from a mining perspective, but we also see that processing and refining is key, especially with imported raw materials potentially filling some of the supply gap, and recycling as well, and maybe also into active materials as well. And again, this is designed to meet these long-term targets within the EU as well, so particularly around sustainability, the new battery regulation, which should be launched next year, and also this 2050 zero carbon footprint. So our focus is still on Europe, but we recognise that we're going to have to scout the world for some resources to help fulfil EU domestic targets and the battery value chain requirements. Okay, so just a quick overview of the sort of current EBA picture of the European battery value chain. So as I mentioned, on the downstream side, so for cell and pack manufacture, of course, everyone's sort of heard about the OEM plans and targets with regards to electrified vehicles. It's a busy space. There's a lot of gigafactories going up across Europe, either homegrown, supported by the OEMs, or overseas projects by particularly Asian cell manufacturers looking to expand into a growing European market to meet the demand. So, really on this side, currently in Europe, it's more about execution. So we'll see as many of these projects start to sort of come towards production, just how realistic it is to expect that the targets for battery demand will be met. And I think in the panel discussion afterwards, we'll touch on some of these points in a bit more detail. But effectively, that's a relatively pretty picture as it stands, albeit one that is likely to be somewhat impacted by the US IRA incentives, which are attracting more investment now across the pond into North America in the US, that may see, again, not necessarily a sort of impact directly on Europe, but simply the resources required to get all of this up and running now has several levers that are all pulling in different directions with regards to geography. So here's the sort of stack up, I guess we can see that really sort of hits home where the problems lie in Europe. So On the right-hand side here, we've got a relatively growing requirement, relatively good growth in terms of meeting the requirement for the downstream. So for recycling, for pack and application manufacturing and battery manufacturing. In terms of the sort of plan for 2030, we're sort of getting up near to the target requirements by those sort of lighter blue bars. But in the yellow box I've highlighted on the left-hand side, we can see that still for most battery raw materials, we're well away from European self-sufficiency in terms of fulfilling that downstream requirement. So, for many of those, we're not even anywhere near the 2025 target, let alone expecting we're going to meet the 2030 one. And let's be honest, that's not going to change overnight. It's going to come through largely this downstream securing raw materials from elsewhere in the world. And that's currently very much the trend that we see. One other point I'd like to make sort of clear as well, and this applies to all of the steps in the battery value chain, and we know it well from the mining side, is skills. And in such a rapidly growing marketplace with lots of projects underway, lots of new opportunities, there's a big skills pool. And unfortunately, most of these steps aren't currently of a significant development status within Europe. I mean, even in Asia, there's a big draw on talent just for the domestic established industry, let alone the growth one. And so, as part of the InnoEnergy EBA network, we're big investors in education. We run European Battery Academy with a sort of partnership approach between different institutions to try and rescale, upscale, or train more people to be able to operate, to build, to equip and plan this value chain as it grows so quickly. And then also machinery as well. I think, as everything sort of ramps up, the sort of pull on actual fitting out of such facilities, even once the sort of shell has been built, is going to take quite a big draw of resources. And again, I think that's going to be particularly noticeable on the active and the battery manufacturing side. So on the mine and refining side, it's less of a complex picture with regards to domestic resource development for the European battery value chain. So one thing that has increasingly become the trend over the last 18 months, I would say, and I've sort of highlighted in red, is this growth in refining facilities for imported raw materials. So in particular for lithium, we see a lot of companies planning conversion facilities in Europe to make lithium carbonate or lithium hydroxide. We're also starting to see similar approaches for nickel and cobalt, as again, the sort of midstream of the value chain starts to demand specific chemicals and salts, and existing facilities in Europe often making metal or other products don't have the capability, at least in the short term, to pivot to be able to supply those. So, definitely a trend is around refining capability within Europe. That, arguably you could say should be slightly easier to get up and running, but of course it increases the reliance on foreign supplies of raw materials. On the actual mine side for Europe, it's still quite a slim sort of picture. Most of those lists sort of highlighted in blue there are the sort of more advanced projects that we're currently tracking in Europe. Some of those, the ones that have got the blue star, are projects that InnoEnergy, through its existing business, are already involved with. Some separate ones as well. But of course, we know that in Europe there's some big challenges to face with regards to moving these projects through. Either technology, permitting has been a particular problem for some assets, and that's not going to be solved overnight. But we have a good resource base. I think with more energy, more resources, more of an effort, and we'll see what the EU Critical Raw Materials Act brings in with regards to a bit of maybe a carrot approach to the development of domestic resources next year brings, and maybe that will improve the picture in future years. But our job in terms of this new European Battery Materials Fund is really to try and solve this gap in the markets with regards to mined and refined raw materials. And we started to get a lot more active in some of these projects now to try and get them moving along. So in terms of the market outlook, what do we see? And this is where I've sort of tried to make the link to actual sort of volume and technology trends in particular. So here's BNEF's projection from this year around the growth in battery requirements for all industry. So this is sort of advanced batteries for various sort of sectors. And, unsurprisingly, there's some very lofty expectations around the size of the industry. So in the, I think it's in the net zero target scenario, we're looking at 13.5 terawatt hours of battery capacity demanded by 2040 under the sort of economic transition scenario, where we might expect that not to be such a sort of push towards meeting that net zero goal for various reasons. We only get to 7.5 terawatt hours in 2050, but nonetheless, from today market of less than 1 terawatt hour, we haven't even broached that yet. You can see it's a significant increase, and that is going to bring that whole ecosystem sort of build out to the front, and not least, as has been mentioned variously, the requirements for raw materials. Now, there's, of course, differing requirements for these raw materials within the battery industry. So you could basically split this a number of ways, but I think two of the most important ones really to concentrate on are the electric vehicle split, which the blue arrow sort of leads to, and the energy storage splits, which will help to make the grid, particularly with renewable energy, more resilient in the long term. And the batteries required for these two different markets, of course, will have different attributes. So for energy storage, it's less about power, it's more about cost and cycle life. For electric vehicle market, it's more about power, more about weight and size. Cost is important, but I think given where the industry is going, that may be sort of, I guess, evened out by the cost of ownership perspective versus internal combustion engine. It's and I think that the key thing about that is that wherever you have this division in terms of product requirement, you're going to see a variation in the materials used. So on this sort of graph, it shows this sort of current split between the different types of chemistries that we see in the market today. And I think you can divide that, really into sort of three distinct segments that align to those battery end use requirements from the end product or the end customer. So we have the high performance specialist applications. Here, cost is less of an issue. Performance is more of the requirement. So here we're seeing, very high nickel chemistries, quite exotic, maybe additives, metal coming in, solid state batteries in the current sort of status are where this market sort of really sits. The high volume performance, this is your sort of, I guess the sort of more discussed end of the segment with these high nickel chemistries, but also now for performance boosters like silicon anodes or magnesium-rich chemistries starting to appear. And then for the entry-level low cost, and of course, those of you that are following the electric vehicle industry will have seen LFP appear and then disappear and then reappear quite recently. And this is driven by the requirement to move the competitiveness of electric vehicles more into the mass consumer part of the market, where price is more of the carrot to the customer to switch from internal combustion engine. So here, as well as LFP, we're starting to see some more interesting chemistries like lithium manganese iron phosphate, or even one of the newest ones, the sodium ion. And as a result, I think we're going to see more of a variation in the commodities required for the battery industry to meet those energy transition targets over time. So we're sort of starting to see a switch more into more bulk commodities that, of course, carry lower costs. So things like your iron and manganese, silicon, albeit still requires some relatively complex processing to get into an anode form. And then we're starting to see as well sodium come in as a replacement for lithium. It's really currently, I think, the sort of targeted one to sort of make up or sort of reduce the pressure on lithium demand but also effectively try and decrease the cost a bit further as well from especially in the current lithium price environment, what is creating, still very expensive cells versus the market demand. And then, some more elements that perhaps are relatively well known amongst the battery industry or other, but are starting to appear more in some of the technologies. So we see a particular sort of push towards zinc-based batteries, more so in North America, less so in Europe. The development has been slim here, but in North America higher. Aluminium batteries, and also things like vanadium redox batteries, especially for sort of longer duration energy storage systems. And we can also look at the sort of scary predictions about the increase in demand for raw materials that is going to transpire, and what that might mean. But to sort of throw up this IEA projection, we're seeing compared to 2020 for 2040 sort of targets, anywhere up to sort of 40 times the current raw material demand. So yeah, nothing new to you, I'm sure, but just to hit home the real impact on that. What does it mean? I think what's important is that on the supply side, as it turns for raw materials, that mining is a slow burn in terms of development, and there are a lot of headwinds that really sort of play into why that is the case. We discussed a few of these already. There are some opportunities, I think, on the supply side to change that. For sure, technology will be a key driver of this. So we've seen big shift into lateritic nickel, which even 5 years ago was sort of seemingly the kind of unloved child of the nickel industry. It's become the go-to place to speed up nickel cobalt production for the battery industry. A lot of interest in direct lithium extraction, for example, as a way to improve the sort of footprint and sustainability of lithium production, but also, in effect, to speed up the timeline. Principally, if you can put a direct lithium extraction plant on a geothermal resource that's already in production, you don't need to worry about, starting up a new mine or building up necessarily a big refining complex somewhere that's, maybe greenfield or not had the same type of process development in the past. But there's another sort of shift happening as well, which is, as mentioned on the previous slide, a technological switch actually that'll affect the demand side. So, starting at the top, we've got even such things as substitution of hydrocarbons by e-fuels. So that could be one sort of change, including not least hydrogen. I think probably most people are skeptical about hydrogen's role, but for sure it will play a role somewhere. I think especially for those industries that aren't so easy to electrify, and that includes a fair amount of material processing and refining that exists in this industry today. Then we see, as mentioned, some of these technologies on the last slide that are coming in to help with meeting the demand for certain applications at a certain cost, or simply to replace other commodities that are just seemingly lagging in terms of their developments and what they're able to deliver for the customer and its speed to market. And the question is, really, which I think is one for the the sort of mining industry to consider, is which way offers the best return? Where are the dollars flowing? And I'll be honest, I've not done the maths, but I would say there is a lot of money going into alternative technologies, and you could arguably say that the amount of money coming into mining is, if not in scale, at least in terms of impact so far, has been relatively light, albeit perhaps with the exception of Chinese capital coming into things like Indonesia for nickel production or Australia or South America for lithium production. Certainly from the Western perspective, that there hasn't been a lot sort of happening to speed up supply. We've got an industry that's slow, capital intensive on the left. We've got development that is also slow, also sort of capital sucking, but effectively which solves the problem more quickly. A switch in simply what's needed, or greater supply of what's currently demanded. And I think as InnoEnergy, we're sort of rather, commodity agnostic. We're not particularly focused on any one technology, and that's why, beyond what sort of shown around the sort of value chain in Europe, we're involved in a lot of different areas, more so linked to effectively around the technology sort of space and what's sort of coming. So yes, we're involved in companies that are establishing, existing sort of, I guess you'd say, mature battery technology like Northvolt, PBT in Germany, this Australian company, Euromanganese, Vulcan Energy. They're each looking to do something slightly different with regards to raw material supply, but still linked to those sort of same commodities. At the same time, we've got a silicon battery company in our portfolio, supercapacitors in skeleton. We've got some flow batteries in here as well, silicon anodes, and one of our sort of most recent investments is Altris, which is a company developing sodium ion technology and using abundant elements that seemingly will provide a much lower cost. So I think from the perspective of sort of InnoEnergy's sort of businesses, we see that demand for raw materials to fill the sort of short term, but we're also aware that there's a lot of technologies out there that are trying to solve the problem in a slightly different way by looking at different types of materials that can fulfill the demand for this energy transition long term. So that's where we sit. Thank you.